Hey everyone, a lot of new investors will go into earnings and not know what they should do. But there are always three options for any investor or trader: to buy, sell, or hold. And for the majority of the time, you should only be doing the third option. You should only be holding. Earnings are a binary event, which means the stock's going to definitely go one way or another after that event. But we don't know what's going to happen in earnings. That's why a lot of people were confused when I sold Palantir right before earnings. I sold 25% of my position at $25.29. This sale locked in 45.42% in gains on shares that I bought for $17.39 back on January 5th of 2022. The sale lowered my per share cost 26.42%. down from $14.12 to $10.39. But if you never know what's going to happen in earnings, what was it that made me sell off some of my Palantir right before earnings? As you can see, Palantir rallied significantly going into the earnings report and popped more than 8% on the day of the earnings. In fact, in less than a week, it rallied 17.22%. And on the day of earnings, all over X, people were saying, someone knows something. And I know that no one knows anything. Whenever a stock rallies that much and I start seeing posts about someone knows something, I know that what we're actually looking at is consensus. You should beware the wisdom of crowds. Now, in the long term, it turns out the stock market and the wisdom of crowds tends to be pretty accurate. But in the short term, people are buying because other people are buying. Not because someone knows something, but because the momentum is taking everybody into the event. And in this case, everybody thought Palantir was going to report a blowout quarter, which they did. But when they gave negative guidance, the stock sold off more than 15.8% the following day. And it's not just Palantir that exhibits this kind of behavior. Let's take a look at Nvidia. And as you can see, as it was going into its earnings report a couple of quarters ago, it rallied 28.85%. And even though it blew away numbers, this was in November of 2023, they didn't raise guidance as much as investors thought they would. And it ended up pulling back almost 11% from that high. And this kind of price action happens in more than just tech stocks too. Here's Disney, which rallied 6.11% going into its most recent earnings report. And they missed on some of their revenue, which caused the stock to sell off 9.88% the next day. Whenever a stock rallies into earnings, it's usually a good sign that everybody thinks a good event is going to happen. And quite often, the opposite happens. Here we've got Costco. Before their last quarter, they rallied 6.47% into the earnings report. Came out, disappointed, and sold off 9.66% immediately following. However, if a stock rallying into earnings will result in a sell-off after earnings, what happens when a stock sells off into earnings? For this, let's look at another popular stock, Tesla. When Tesla was headed into its most recent earnings report, everybody thought it was going to report a terrible quarter. In fact, it was more or less expected by the entire consensus that after they reported earnings, Tesla would sell off even more. Going into the earnings event, Tesla sold off nearly 23%. Bottoming a day before earnings. And when they reported earnings, it was a huge disappointment, even more than everybody was expecting. However, that was the same time that CEO Elon Musk came out and said that they were doubling down on a cheaper EV. Additionally, he emphasized that robotaxis are just around the corner. And this turned out to be enough of a good catalyst that investors piled into the stock, and there was a short squeeze. So in just a few days after he reported earnings, Tesla was up more than 43%. Now, it's important to remember that none of these rules are hard and fast. There is no rule in the stock market that always works. But it's always a good idea to pay attention to price action going into an earnings report. Most of the time when you go into an earnings report, you shouldn't do anything at all. You should just hold on to the position because you're in it for the long term and see what happens after the earnings report. However, if a stock I'm looking at buying is headed into earnings and I want to have a position, often I will buy some before the earnings report. I did this on May 7th when I bought 21.8% of the position I wanted in Sprott at $40.94. Now, I've just talked about earnings being a big binary event. You can't predict which way it's going to go. So why did I do that? Normally, I buy 50% of an allocation when I'm opening a new position. So what I did with Sprott was to buy less than 25%, half of that 50% allocation, before earnings. This way, if Sprott comes out and reports a blowout quarter, I didn't miss this buying opportunity to buy at a lower level. I will go ahead and buy the remainder of my 50% allocation at the higher price, which will raise my cost basis. But at least I evened out my cost basis by buying some before earnings. Conversely, if Sprott comes out and disappoints on earnings and sells off, I didn't buy a full 50% allocation. So I can buy more at lower levels and increase that allocation, with my next buy target at $38.74, a price that it's seen support at in the past. Now, if a stock that I own, and I have a long-term position in it that's profitable, starts to rally significantly into earnings, like Palantir did, that's why I took profits. If Palantir came out and gave really good guidance going forward, and the stock rallied significantly, I still had 75% of my position. However, because I took profits into earnings, I was able to lock in those 45.42% in gains on those shares that I bought for $17.39. I always say you have to take profits when you have them. Otherwise, the market will take them from you. And Palantir's earnings report was a perfect example of why I take profits. I am a long-term investor, so I do hold these positions for the long term. However, it's important when you've got significant gains in a position to just trim a little, because you don't know what's going to happen. Now I have that capital freed up, so I can put it back to work at lower levels. For more tips, tricks, and in-depth analysis into stocks and Bitcoin, check out some of my other videos here. Thank you for watching, and I'll see you in the next video.